Israeli billionaire Teddy Sagi escaping an assassination attempt on the island of Cyprus.
Israeli billionaires, some of the most influential figures on the global stage, often operate behind the curtain.
Lev Lev is a really fascinating person. He's one of the most prominent diamond traders in the world.
Their fortunes tied to both success and scandal, from shipping empires and real estate dynasties to legal battles over sanctions and shady deals. Their stories reveal more than just riches, but what price do they pay for their wealth? And how far do they go to protect their empires? Stick around as we unearth the dark world of Israeli billionaires. Dan Girtler. When we talk of wealth and power, some figures thrive in the shadows. Dan Girtler, an Israeli billionaire, is one of them. His story is about deals that raise eyebrows, alliances that provoke suspicion, and a fortune built on more than just business smarts. There's a darker side to his success, a side where questions far outnumber answers. What secrets lie behind his staggering wealth? The truth is questionable, but what's clear is that Girtler's rise to power is anything but ordinary. Dan Girtler's story is as old as the diamond business itself. Born in 1973 in Israel, he has diamonds in his DNA. Raised amidst the sparkle and allure of gems, he carved out a path that led him to become one of the most prominent figures in the diamond mining world by the late 1990s. The Democratic Republic of Congo is where Dan Girtler's story truly unfolds, like an intriguing novel. Here, he secured lucrative diamond and mining concessions, marking the beginning of his fortune. The DRC's rich natural resources were both a blessing and a battleground for many seeking wealth. Girtler's ventures weren't limited to diamonds alone. He later expanded into oil and cobalt extraction, weaving himself into the very fabric of the nation's economy. His rise was bolstered by strategic alliances with influential figures like Joseph Kabila and Laurent Kabila. These relationships were pivotal, allowing him access to resources that others could only dream of. As Girtler's empire grew, so did his network of business dealings. Companies such as Glencore International plc and Fleuret Group found themselves intertwined with his operations. Yet these partnerships weren't without their shadows. The ethical concerns surrounding his operations are akin to dark clouds overshadowing a sunny day. Allegations of blood diamonds cast a long shadow over his business endeavors. His close ties with President Joseph Kabila raised eyebrows worldwide. In 2017, these connections would lead to significant legal challenges. That year proved to be a year of reckoning for Dan Girtler. The US Treasury sanctioned him under the Global Magnitsky Act, accusing him of corrupt practices, including bribing officials to secure mineral rights at prices far below market value. These sanctions resembled an earthquake, rattling his carefully constructed empire. Following an intriguing twist in this saga, some sanctions were partially lifted during Trump's presidency, leaving many speculating about behind-the-scenes negotiations. Girtler's financial maneuvers are nothing short of an intricate web, an offshore holding complexities that leaves many wondering. Through complex structures and entities spread across various jurisdictions, he amassed wealth that defied conventional understanding. Despite facing numerous legal challenges and allegations, Girtler steadfastly denies any wrongdoing, a position he maintains as resolutely as ever. Even amidst sanctions and controversies swirling around him like relentless whirlwinds, his financial fortress stands strong. While some view him through lenses tinted with skepticism due to his dealings in Congo's complex landscape, others see an astute businessman navigating turbulent waters for success against all odds. Benny Steinmetz. While Girtler's ties to African corruption are unsettling, he's not alone in navigating such murky waters. Let's meet Benny Steinmetz, another Israeli billionaire entangled in global mining scandals. Benny Steinmetz, born in 1956, inherited a diamond empire from his father and expanded it into various industries such as mining, real estate, and oil. His journey into the global business world is filled with both successes and controversies. He grew his family business and also ventured into new territories. Understanding the complexities of international markets, he used his assets to build an empire that impressed some but raised eyebrows among others. His investments took him to places like Guinea, where he saw potential in the Simandou project. The Simandou project in Guinea became a significant chapter in Steinmetz's career. It was a massive opportunity for iron ore extraction, promising substantial profits. This venture could potentially disrupt major players in the industry with its vast reserves. Like any wise investor, Steinmetz couldn't resist the allure of Simandou. In 2008, his investment firm BSG Capital secured mining rights for this project. However, what seemed like a straightforward business move soon turned into controversy as allegations started surfacing. Business dealings aren't always clear-cut. Sometimes they operate in morally ambiguous areas that make us question everything we know. For BSG Capital, things took a turn when accusations of bribery emerged regarding their acquisition of mining rights for Simandou. These allegations suggested that officials in Guinea were enticed with incentives that crossed legal boundaries. What began as whispers soon grew louder and reached international attention. This raised doubts about whether BSG Capital's actions were genuinely based on sound business judgment or if they strayed into unethical territory. These inquiries challenged Steinmetz's integrity and also put his entire empire under scrutiny. This quickly spiraled into conviction and trials. But how did it happen? Legal battles can be as gripping as any thriller series, and this part of Steinmetz's life didn't disappoint. In 2021, after years of investigation, a Swiss court found him guilty of corruption related to his involvement with Simandou. This conviction was significant, not just because justice was served, but because it highlighted how power dynamics work within high-stakes industries like mining. It showed the potential consequences when influential figures cross ethical lines for financial gain. Lev Lev. As the drama of African mining continues, let's shift our focus to a billionaire whose empire was built on something far more glittering. Lev Lev. Born in 1956, he arrived in Israel as a young immigrant from Uzbekistan and quickly made a name for himself in the diamond-cutting industry. But like many stories of wealth and power, there's a darker side beneath the surface. Leviev didn't just survive in the diamond business. He transformed it. Challenging De Beers' monopoly was no small feat, yet he managed to do just that through his ventures like Africa-Israel Investments and LLD Diamonds. His business skills didn't stop there. He wisely expanded his empire into real estate and telecommunications, making him a powerful figure in multiple industries. But what happens when the walls built around such an empire start showing cracks? For Leviev, those cracks revealed a darker narrative. The diamond industry is often associated with glamour and luxury, yet it is also notorious for its underbelly of illegal activities. Leviev's reputation hit when allegations of a diamond smuggling scandal emerged, shaking the foundations of transparency within his operations. This wasn't just any minor accusation, it questioned the ethical practices of his entire enterprise. His connections to this scandal raised eyebrows globally, weaving his tale deeper into the dark world of Israeli billionaires. The scrutiny intensified as authorities dug deeper into these claims, seeking clarity amidst the glittering chaos. But wait, there's more. Beyond smuggling, Leviev faced accusations related to labor exploitation in his mines across Angola and Namibia. Picture this: workers toiling under harsh conditions while diamonds worth fortunes change hands at smart auctions. These accusations sparked outrage among human rights groups who demanded accountability for such practices. A detailed analysis of corruption in the diamond sector in Angola reveals the extent of these issues. His operations were further tainted by allegations linking him to money laundering schemes across Europe. The stakes were high as investigations in 2018 led to arrests of several associates connected to these financial misdeeds. While some argue these investigations were overdue, others see them as part of an ongoing narrative where power struggles intersect with ethical dilemmas. Idan Ofer. The world of diamonds may be glamorous, but the environmental impact of shipping and oil is where the next Israeli billionaire draws both controversy and profits. Let's look into the intriguing life of Idan Ofer, a man who seems to have taken the term shipping magnate to a whole new level. With family roots deeply anchored in Israel's business elite, this billionaire has managed to both expand his father's empire and weave through controversies with a sailor's finesse. Born in 1955, Idan Ofer grew up amidst the luxury provided by his family's shipping dynasty. His father, Sami Ofer, was a giant in the shipping industry, building an empire that became legendary. When Sami handed over control, Idan didn't just keep things running smoothly. He explored new opportunities and ventured into unknown territories. Under his leadership, the Zodiac Group became synonymous with maritime power. But there's more to Ofer than just ships and sails. He holds substantial stakes in the Israel Corporation, a massive company with interests in oil refineries, chemicals, and more. This strategy of diversifying wasn't just about reducing risks, it was about expanding into international markets where fortunes are made and lost. His partnerships with major companies like Rio Tinto and Vale SA aren't insignificant details. They're important parts of his business story. These collaborations have not only strengthened his position in global shipping, but also highlighted his strategic thinking. Rio Tinto is known for its expertise in mining and its need for efficient transportation, while Vale SA is a Brazilian multinational corporation that aligns with Ofer's global ambitions through its extensive mining operations. Through these partnerships, Ofer has skillfully navigated the complexities of international trade, directing his businesses towards thriving markets and unexplored possibilities. However, every ship encounters storms, and Ofer is no stranger to rough waters. Critics have often pointed fingers at environmental damage associated with his businesses, particularly those involved in fossil fuels, a challenge not easily overcome in today's environmentally conscious world. The ecological impacts of these industries continue to be hotly debated among activists and policymakers alike. And then there's the shady specter of dealings with Iran before sanctions slammed shut those particular trade routes. Although these allegations haven't always stuck like barnacles on a hull, they've certainly stirred up enough waves to keep Ofer's name circulating through boardrooms and newsrooms around the globe. Idan Ofer remains a puzzling figure who avoids the spotlight whenever possible. While some billionaires enjoy being in the media spotlight like seagulls under a summer sun, Ofer prefers taking quieter paths away from prying eyes. Sagi. From controversial oil deals to gambling, our next billionaire thrives in a world where luck and strategy are both equally important. Sagi is a well-known name in the online gambling world. This Israeli entrepreneur made his mark with Playtech, a major player in online gaming software. In 1999, Sagi founded Playtech, a company that would revolutionize online gaming by offering innovative software solutions for online casinos, poker rooms, and sports betting. With a finger on the pulse of the rapidly expanding online gambling industry, Sagi's platform quickly became a staple for many of the largest gaming operators worldwide. It wasn't long before Playtech went public in 2006, floating on the London Stock Exchange. This bold move catapulted Sagi's net worth into the billions, as Playtech grew into one of the most significant players in the gambling industry. Playtech's success shows Sagi's business skills and his ability to predict the digital shift that would transform traditional gambling. His ventures don't stop at online gaming. He has also invested heavily in real estate, including significant projects like London's famous Camden Market, which he acquired for $400 million. His ventures now include massive real estate projects across Europe and investments in cybersecurity and e-commerce platforms. These investments demonstrate his knack for spotting diverse opportunities, making him a powerful figure across various sectors. However, only some things in Sagi's story are shiny. In 1996, he was found guilty of insider trading, which still haunts his otherwise successful career. This conviction was a turning point in his life, leading to increased scrutiny of his business activities. Despite this setback, Sagi bounced back impressively. Sagi's companies have also been caught up in these controversies, dealing with legal battles that question their integrity. Looking closer at the legal problems involving Sagi reveals a complicated situation where business interests frequently clash with regulations. Allegations against his ventures often focus on financial misconduct and unethical practices, common complaints within industries operating on such large scales. Idan Ofer. Sagi's gambling empire may draw intrigue, but for our next billionaire, managing real-world infrastructure across oceans carries its own dark shadows. Imagine a man steering not just ships across the oceans, but also major real estate developments in some of the world's most coveted cities. Meet Idan Ofer, a name synonymous with maritime strength and urban luxury. Born into the renowned Ofer family, Idan inherited his share of the family fortune, which came from a strong shipping empire. But unlike stories where fortunes shrink over time, Idan expanded his legacy far beyond the open seas. Idan's influence is strongly felt in the world of real estate. He has carved out a unique space for himself in luxury real estate markets across New York and London. Idan Ofer's properties speak volumes about luxury and exclusivity. His strategic acquisitions have made him a key player in shaping urban landscapes. Through his control of the Zodiac Group, Isle manages an enormous fleet that effortlessly moves through international waters. Beyond all this investment, Isle also has an eye for art, a passion that sees him amassing works that complement his extensive property portfolio. But every giant faces a storm now and then. For Isle, one such storm was the controversy surrounding the family's shipping activities. In 2011, the US imposed sanctions against their company for allegedly selling tankers to Iran amidst existing international sanctions on the country. "We were unaware," claimed the Ofer brothers as they navigated through these allegations, denials that echoed amidst global scrutiny. Although Isle Ofer and his company avoided several legal penalties in the Iran sanction case, the incident damaged the family's reputation. The US Department of State listed Ofer Brothers Group on its sanctions blacklist, and the public perception of the company was deeply affected. While the sanctions were later lifted, the reputational damage lingered. It wasn't just this legal battle with the family business. Isle's real estate empire, under the Ofer Global Group's real estate arm, faced legal turmoil. One noticeable legal case involved disputes over property acquisitions and zoning issues in New York City. Ofer's real estate group was embroiled in a series of lawsuits involving local governments and real estate competitors over the development of high-profile properties in Manhattan. These cases often revolved around the contentious process of securing approvals for building skyscrapers and dealing with claims of violating zoning laws or using questionable tactics to acquire properties. In one instance, Ofer's company faced a lawsuit regarding the development of a luxury high-rise in Manhattan. Competitors and community groups accused his company of using aggressive and underhanded tactics to push through the development, allegedly bypassing local regulations and ignoring environmental concerns. This issue was later settled out of court in a deal that people saw as shady, considering that the details of the settlement weren't made public. Adam Newman. Imagine building an empire worth billions, only to see it crumble under the weight of controversy and questionable decisions. Adam Newman's journey from a visionary leader of WeWork to a symbol of corporate excess is a tale that perfectly captures the dark side of ambition. Adam Newman was born in Israel in 1979 and grew up in a kibbutz before moving to the US at the age of 22. He studied at Baruch College in New York but dropped out to pursue his entrepreneurial dreams. Newman's early ventures, including a failed baby clothing company, didn't immediately scream success. But Newman's charismatic personality and unrelenting ambition paved the way for something much bigger, WeWork. In 2010, alongside co-founder Miguel McKelvey, Newman launched WeWork, a company designed to revolutionize the workspace by offering flexible, shared office environments. This wasn't just about real estate, but about creating a movement, at least in Newman's mind. He often spoke of making a life, not just a living, positioning WeWork as more than a business, but as a community of creative, entrepreneurial thinkers who could thrive together. Under Newman's leadership, WeWork exploded in growth. It expanded globally, and by 2019, it was valued at a staggering $47 billion. Newman's personal wealth also skyrocketed at one point. He was worth over $4 billion. He enjoyed the perks of his newfound status, living a lavish lifestyle that included private jets, luxurious homes, and a penchant for partying. But as WeWork's valuation soared, so did Newman's aberrations. He famously talked about wanting to become the world's first trillionaire, and his vision for WeWork seemed increasingly out of touch with reality. Newman began to stretch the limits of his leadership, intertwining his personal life with his business decisions in ways that would eventually spark outrage. Newman's leadership style was described as magnetic, yet reckless. He fostered a cult-like following at WeWork, with many employees deeply devoted to his vision of changing the world. But that passion was often met with chaotic decision-making. Newman's desire to turn WeWork into an all-encompassing lifestyle brand saw the company expand into areas like We Live, shared living spaces, and We Grow, an alternative school co-founded by his wife, Rebecca Newman. However, these expansions stretched the company thin and brought WeWork dangerously close to financial instability. Adam Newman's personal life was just as unorthodox as his business. He was known for taking tequila shots at staff meetings, walking around the office barefoot, and promoting his personal philosophy of elevating the world's consciousness. Yet behind the scenes, stories of excessive spending emerged. Newman reportedly spent millions on properties and traveled on private jets at the company's expense. The business started to feel more like Newman's personal playground than a tech-driven disruptor. The cracks in WeWork's foundation became impossible to ignore by 2019. As the company prepared for its highly anticipated IPO initial public offering, investors and analysts began scrutinizing WeWork's financials and Newman's erratic behavior. What they found was alarming. The company was bleeding money, posting over $1.6 billion in losses in the year leading up to its IPO. But more shocking was the discovery of Newman's personal financial dealings. One of the most controversial aspects was Newman's decision to trademark the word "we" and then sell it back to the company for nearly $6 million. This blatant conflict of interest caused outrage among investors. Additionally, Newman had borrowed heavily against his shares in the company, raising concerns about his personal motivations. As these revelations came to light, it became clear that WeWork was built more on hype than on solid business fundamentals. The IPO was eventually scrapped, and WeWork's valuation plummeted from $47 billion to just $8 billion in a matter of weeks. Newman was forced to step down as CEO, but not before securing a nearly $1.7 billion exit package, a golden parachute that enraged both employees and investors alike. After his resignation, Newman largely disappeared from the public eye, but the damage was done. WeWork became a cautionary tale in the tech world. Sher Arison. Our final figure may have a less glamorous backstory, but her philanthropic focus masks a web of controversy in the banking world. Sher Arison stands out as a figure whose name is synonymous with immense wealth and influential business ventures. But her journey is not just about building an empire. It's a story laced with controversies that challenge the glossy surface of her success. Can a billionaire known for promoting global peace and sustainability truly lead an empire built on questionable practices? The story of Sher Arison reveals how the pursuit of wealth and ethical dilemmas often collide, leaving a complicated legacy. Born in 1957, Sher Arison was raised in a world of luxury, thanks to her father, Ted Arison, who founded Carnival Cruise Lines. However, Sherry's rise to prominence didn't fully materialize until 1999, when she inherited her father's fortune after his death. This inheritance came with money and significant control over some of Israel's most influential businesses, including Bank Hapoalim and Shikun and Binui, a leading construction and infrastructure company. For many, inheriting a fortune would be the end of the story, but for Sherry, it was just the beginning. With wealth came power, and she expanded her reach across industries, leading her to become one of Israel's richest women. At the height of her control, she represented the perfect image of success, with a business empire that touched everything from banking to real estate and infrastructure. Arison's most significant holdings were in Bank Hapoalim, Israel's largest bank, and Shikun and Binui, a major player in the construction world. Under her leadership, both companies saw expansion. Her father's legacy was evident in the way she managed these businesses, but her approach often veered toward blending business with her personal philosophy of sustainability, peace, and spirituality. She launched various philanthropic initiatives under the Ted Arison Family Foundation, which focused on education, sustainability, and humanitarian causes. But behind the scenes, her business ventures were not as peaceful as her public image suggested. Despite Sherry's philanthropic facades, her empire has not escaped scandal. The most significant controversy came in 2018 when her company, Shikun and Binui, was involved in a massive bribery scandal. The allegations were shocking. Shikun and Binui was accused of paying bribes to government officials in Kenya and Guatemala to secure lucrative infrastructure contracts. Investigations revealed that between 2008 and 2011, company executives, possibly acting on orders, paid off officials to win bids, which questioned the integrity of one of Israel's largest construction companies. The impact of this scandal was significant, damaging not only Shikun and Binui's reputation, but also casting doubt over Arison's philanthropic persona. For a woman who publicly advocated for peace and sustainability, being associated with corrupt practices in developing countries created a severe contradiction. It didn't end there. Bank Hapoalim, another cornerstone of Arison's wealth, was also involved in controversies. In 2020, the bank reached a settlement in a money laundering case involving American clients who used offshore accounts to evade taxes. After the 2018 bribery scandal, Arison began stepping back from her businesses. In 2019, she resigned from her position as chairwoman of Arison Investments, signaling a move away from the public eye. This was a significant moment for someone who had been a central figure in Israeli business for decades. Whether this retreat was motivated by the need for personal peace or a result of the mounting controversies is still a topic of debate. While Sher Arison remains a billionaire and continues her philanthropic work, her legacy is complicated. Despite these controversies, Sher Arison has made an undeniable impact through her philanthropic work. Her foundation has donated millions to various causes, and she launched Good Deeds Day, an annual event that encourages people worldwide to perform good deeds. Arison has long advocated for values like peace, environmental sustainability, and positive thinking, presenting herself as a champion of global well-being. However, the question that lingers is whether these philanthropic efforts are enough to counterbalance the controversies surrounding her business practices. Her critics argue that while her charitable initiatives are commendable, they do little to erase the darker aspects of her empire. Is it possible to reconcile a desire for global betterment with corporate scandals that undermine those very ideals? Thanks for watching. See you in the next one.